that's my view. I mean, Brazil could also be a good, could have good potential, but we try to stay a little bit away at this time from Brazil. I mean, I guess it's more personal reason than, but certainly Brazil and Mexico has been the countries that have attracted most of the international investment, including the U.S. and of course, private equities, family offices, and institutional look at this country as the larger country in the region and with more potential.
Hey, and Alexio, I just want to jump in here for 2 seconds. So Peru and most people don't know, Peru and Colombia both have very large cities there. I think Bogota has 10 million people and Lima has 8 million, but probably 12, right? Is that an advantage or disadvantage right now with COVID or as the follow-up to COVID in 2021?
Take a crack at that. Go ahead, Alessio. I'll follow you.
Alessio?
You want me to start? Sorry, I thought.
Yeah. The question was directed to you since you're doing so much business in Colombia and Peru. And again, as I said, I know Lima very well, and I know Bogota a little bit, and they're both really big cities.
Yeah, certainly. Peru is a very interesting country. I mean, as you said that Lima concentrate maybe 40-50% as well of a population of the country, and I think we're one of the most impacted countries in the world. I think I saw recently that in terms of fatalities, they are number 2 or something per 100,000 inhabitants. So is facing significant health issues. But Peru has had and Carlos also has a very good experience in Peru. 3 different presidents in a month. And Carlos, I think you can probably provide more details about the recent bond issue of Peru. I mean, it was probably one of the most successful bond issues in the middle of this political crisis. So I'm very bullish on Peru. I mean, they issue 100 years all bond, sorry, $4 billion oversubscribed, and the spread was really, really low. I mean, this is in the case of Peru. I'll probably leave.
I'm sorry, 100 years at what rate?
3 3/4. It was at 3 3/4.
That's not bad. Okay.
I mean, it was the second emerging markets to issue a bond after Argentina, and we all know how that 100-year bond in Argentina ended. It was not a good story, but yeah. I think.
I'm sorry. And Bogota, because I really don't know Bogota very well. If you can just address that, and then Carlos, we'll jump to you after.
Yeah. No. Yeah. Okay. Let me finish it with Colombia. I must say that Colombia is a little bit more fragmented. I mean, you have 4 or 5 cities. Bogota, of course, is the largest, but then you have Medellin, Cali, Barranquilla, maybe Caramanga. Actually, I'm from Colombia. So, it's more fragmented, and they have been able to control, the spread of the virus because it's not as concentrated, I guess, as Peru. I mean, they don't have, like in the case of advantage, in the case of Peru, they don't have the advantage of the, metals or the commodities. I mean, Colombia, in terms of commodity, depend mostly in oil and gold, which are not in the best, is not the best performing year for sure. But I think Colombia also is more diversified than some other countries, even compared to Chile. And it has probably the 3rd largest population in the region in South America, including Mexico. And they, I think, politically are in a better position than most of the countries in the region compared to Peru, even Mexico, with the current government that has been making significant changes to I mean, for instance, to an energy sector. So, yeah, I think Colombia, also have a good potential, but it's a completely different picture in terms of the economy than Peru. Sorry, Carlos, you were expanding on the bond issue.
Yeah, please, yeah.
Well, I think it's a clear factor that Peru was able to raise a 100-year bond is the massive liquidity that exists in the world these days. You have a globalized monetary emission on the part of globalized on the monetary emission on the other hand, and fiscal stimulus on the other. So there's just lots of money to be invested and not too many places where to invest. So I think it's really pretty incredible that a country that went through having 3 presidents in 5 days, 5 days later is issues a well, it was a 3-tranche issue. I think it was 15, 30, and 100 years, and the 100-year bond was oversubscribed. So I think that once again, is a tribute to all the massive amount of liquidity that's available in the market, which I think in general, our view is that probably interest rates are going to remain low, and therefore issuance will continue to dominate emerging markets, and particularly Latin America, certainly for the sovereigns, the quasi-sovereigns, and certainly the corporates. So we think that that all these generalized low interest rate environments should continue in 2021. And maybe even into 2022, and with the fiscal stimulus that's soon to be approved in the U.S. And probably more, you have Janet Yellen, who is now a renowned fiscalist and a Keynesian. So the combination of Janet Yellen as a fiscalist wanting to provide more fiscal stimulus, and what I call the Powell put, that basically will continue to provide monetary liquidity to the markets. I mean, that's going to keep markets. Stock market's fairly strong. It's going to keep probably alternative assets strong, and it's also going to keep probably investors away from fixed income and looking or into U.S. Treasuries and looking into other sources of income, which I think will favor emerging markets.
Sorry, and was that $4 billion bond, was it denominated in dollars?
Yes.
Interesting, really fascinating. I'm sorry, Tony, keep on going.
How do you mitigate the currency risk in there, Carlos?
Sorry,
well,
before, I mean, just to expand a little bit on Carlos' comment, I think, you know, from the point of view of a US-based family office, you know, considering investing in the region, I think that's one of the, you know, relevant or significant point to consider. I mean, like the rates in Latin America are much higher than in the developed market. So if you consider to the US and Europe, you know, you get very low rates. Compared to Latin America, you find still market that, so most of the market, you know, the rates are higher, much higher and more attractive. So if you're considering diversifying to the region nowadays, because they limited access to capital in the region, you certainly have better return, of course. That has been the norm for emerging markets, but also you have less competition and there are less financial instruments in the region to support companies during this crisis. I mean, and unfortunately, you know, again, the government has limited fiscal capacity, and there are still very good companies looking to raise some capital because they have a good or positive outlook, but still, you know, there are not many options. I mean, the regular banking system has been very conservative. I don't know what's been your experience, Carlos, but you know, they certainly need to for alternative for the regular banking system. And I'm talking about not just direct equity investment or private equity investment, but also, you know, in terms of mezzanine, private debt, we have seen more funds or family office interested in this particular segment. So you were asking something before, Anthony.
Yeah, my question was, you know, especially for structured finance with Carlos, how do you when you do the structured finance products, how do you mitigate the currency risk in those products?
Well, we try to monetize contracts that in some way, shape, or form are linked, either linked to the dollar or are in dollars. For example, we do a lot of business or have done a lot of business with Pemex, with EPC companies in Mexico that have contracts with Pemex and CFE. And most of the time, these contracts are in dollars or are dollar hedged. So that's one way we mitigate. There's also in some of the larger countries, there's a futures market. In Colombia, for example, we did a transaction with a company that does collecting of problem loans for the banks and they were able to hedge their currency risk. So there are ways of hedging, and in some cases we do run the currency risk. At the end of the day, it's going to be a question of cost and the amount of collateral or the cash flows that a particular contract provides at any given point in time. Typically, these transactions for when you're doing contract-backed financing are going to have a relatively short term. So if you take an open risk, it can be manageable.
So some of the family offices that may be thinking about entering into the Latin market right now, what business areas that you see, both of you see attractive as a good entry point for somebody who's thinking of coming in?
Okay, I will start. I take this one. I mentioned before that we have identified, some opportunities in the private debt and mezzanine. There have been fairly a good amount of private equity already, covering the region for many years. But in terms of private debt and mezzanine, I think it's just a handful. A very limited number of participants. What we have been looking at is that, I remember when I executed my first transaction with private equities in the 90s. It used to be 3 or 4 players at that time. Nowadays, you find, I don't know, maybe 100 or something around those numbers. And they have also increased in terms of ticket size. I mean, before, again, in the 90s, they were looking at, $10 to $20 million investment. Nowadays, I mean, most of the large or more better positioned private equities, they raise $1 billion funds. So they are looking to 50 and 100 million investment. So between 10 to $20 million, there are not many groups really focusing in terms of providing, again, direct equity or private debt or mezzanine. All depend. I mean, you need to have certainly, specific knowledge of each country and the opportunities. I mean, in some countries you find maybe Fintech could be an opportunity, direct to consumer, e-commerce. And some other countries could be outsourcing or could be IT. So everything depends on each country. But in terms of ticket size, between 10 to $20 million, not many private equity investors are funding or are focusing in that segment.
Carlos, any thoughts on that?
Well, I agree with Alessio. I think there's what we focus on. We don't work that much with family offices. We work mostly with institutional investors, and we really, I mean, for a while, 5 or 6 years ago, we were doing the smaller type transactions that Alessio was mentioning on the private placement side. That's been fundamentally our niche. But typically now, we will not look at a transaction less than 50 million, because the amount of work that you need to generate on a transaction. Our sweet spot's between 50 and 100 million. If we go above 100 million, then typically we'll look for somebody else to take it with us and go and then do a broader distribution base with maybe more like plain vanilla type instruments. But our base is mostly institutional funds that are dedicated to the region that we've been doing business with for many years and rely on our capacity to originate structure. We know all the stakeholders that we need to talk to, the fiduciaries, the lawyers, the banks, when we do a structured transaction. So I agree that there's, again, it's a function of liquidity. With all the liquidity that's available, I think good structured transactions can get placed.
So if the panel before us talked about a lot of data, technology, and so on and so forth, and kind of touched upon Fintech. Technology is obviously going to play a big role. How do you guys see going forward in 2021 and beyond Fintech, most of the Fintech originating from Latin America, for the market and for the consumers to address that? How do you guys see that?
Okay, I'll work on that one, Tony. Well, we're very positive about Fintech. We believe that clearly Latin America is under digitalized. And I think there's tremendous opportunities. We, being a financial intermediary, having a broker dealer in Panama where we deal a lot with clients, we have been looking for an investment in the Fintech market, because as a part of our brokerage business, commissions keep getting, brokers keep getting squeezed. And so we wanted to have a foot in the door in a Fintech investment. And we were very close to investing in a Fintech broker dealer here in Miami, but we came across a challenger bank in Mexico, and we decided to invest in it. The name of the bank is Fondadora. We invested as principal because we thought there was a way to hedge our business in a way, even though it's not entirely into our line of business in as much as they're a challenger bank, more directed towards payments. But we felt at least it gave us a foot in the door, and it's allowed us to open a line of business in terms of raising money for fintechs and sort of building like a merchant bank. where we have 3 or 4 projects that we're looking at, and typically we will put our own firm's capital into these investments. And in the best of cases, or even at the least, what we would do is just capitalize our fees. So instead of in lieu of cash, we would get our investment banking fees paid in shares. So then we build a portfolio of different companies. For now, we're just focusing more on the payments and remittance side. But I think it's a huge market. I think Latin America is, as I said earlier, under digitalized, and I think there's tremendous opportunities. Alessio, maybe you want to add? I think you've been involved also in that space.
Yeah, we have had some experience, but I just wanted to point out about you know, the largest companies listed or market capitalization nowadays are probably Mercado Libre and Globant, and both of them are, you know, somehow in the direct-to-consumer IT or e-commerce. So I think what this pandemic has forced, not just in Latin America but some other areas of the globe, is you know, developing some area that has been lagging compared to more developing economies. So I think you know, anything that is let's say the new economy in Latin America will have a significant boost based on the current health situation and the pandemic. I mean, they have been putting in a priority of the list, you know, upgrading all the IT technology, you know, being more flexible, you know, different distribution channels, e-commerce, outsourcing. So that's part of the potential that I think we have also identified Latin America.
I think that's a good point that Alessio brings out, and one that we're clearly seeing also is that one, the millennials and certainly the I think the younger generation right now does everything on their handheld devices. And really, in the case of this challenger bank that we're invested in, you open your account in 2 hours. You don't have to deal with you know, going to the bank, all the lines, and you open your account in 2 hours, and the next day you get a MasterCard, a debit card. So the movement of money just becomes a lot more easier to move money from one place to make all your different payments. And I think with the banks also being with a lot of problems with regards to their portfolio, I heard the panelist from that talked earlier that was running an artificial intelligence fund and the traded volatility, saying that there were provisions of the CARES Act that were being unnoticed by, I don't know if you guys heard that. They were unnoticed by a lot of the investors, that potentially could bring a lot of tailwind to the banking system. And as much as apparently there's section 401, 402, I don't remember exactly the numbers, indicated that there's a lot of flexibility being given to banks with regards to how they price their problem loans and how they accrue interest on loans that are not paying. So I think the banks are, you know, the banks I think are big brick and mortar type, so challenger banks and all the fintech institutions I think stand a lot to gain, particularly in countries like Latin America, like Mexico, for example. Like Colombia is also a very interesting market. Peru, any market that has a growing middle class is typically going to be an excellent target for fintechs.
So from what I gather from Carlos, you just said, most of this thing is geared toward, fintech is geared toward consumers, right? Business to consumer practices. And do you see any kind of bridge from business to business, or even business to government for that matter? Because there's so many, obviously there's so many Latin American governments involved in so many businesses over there. Do you see fintech playing any role in that?
We're not really focused on that, Tony. So I don't think I'd be comfortable responding to that, because I mean, there could be some governments that are more progressive, and Mexico, I have to say, created a special law to allow fintechs to develop. So you have a banking license, it's called the SOFIPOS, where that's a special law for fintechs to be able to develop. So I think from that standpoint, you have some governments that are more progressive and more advanced than others. But with regards to, I think for now it's going to be more B2C and also P2P. I mean, it's basically that's, I think, a growing market, particularly on the remittance side. We're seeing a lot of activity, and we're looking at 2 transactions that are going to be involved in remittances right now as we speak. That's a huge market. A country like El Salvador alone, for example, that's $5 billion a year. So if you add Mexico and you go all the way down to even to Argentina, it's just a gigantic market. And particularly with all the migration from different parts of Latin America to Spain and movement within Latin America, I think that's, and people wanting to move funds to families, or families moving that are in the home country, moving to their families that have left. I think there's competition, obviously, but I think there's still space to be able to grow. So I'm sorry I didn't answer your question, and I went in a separate direction. But I'm not entirely clear in seeing that the governments are going to be really involved in fintech.
Guys, I just want to jump in here again, just for one quick second. So, and moving away from like the venture aspect, but really towards infrastructure. So, obviously, with COVID, the U.S. has moved more towards kind of this online logistics perspective for all the different retailers and sellers, et cetera. Are you seeing the same thing happen in Latin America? Or are you seeing a lot more logistics-centric sort of deals? Right? I mean, it's hard to imagine the stores being open, but people still need stuff to be delivered. Can you discuss?
Alessio, you want to take a crack at that?
Yeah, thank you. Yeah, certainly. I think the lockdown measure has been extreme in Latin America. So, anything related with e-commerce, logistic, and online digitalization, I think is even more a priority in Latin America than in the US, where some market has been able to keep some of the business running. I think Latin America is changing dramatically with the pandemic in terms of the way that they used to do business, in terms of the infrastructure that you needed. I mean, they have been getting more flexible in terms of offices. It's very common in Latin America to have a secretary to any executive. So they are getting more practical, because now you cannot handle your business life with a secretary anymore because of the restrictions. So I think Latin America is going through a more dramatic change than the US and European countries, because they were far behind in terms of infrastructure and e-commerce and logistic to be able to place orders online and to distribute with the current based on the current situation.
And just to address that, I mean, we had talked earlier in the real estate panel about how hospitality is being impacted in places like Florida. Obviously, there's a lot of tourism in Latin America, so I imagine hospitality is being impacted there. But real estate changes, right? The utilization for real estate goes to, warehousing, industrial properties. So are you seeing any kind of a movement or a migration for how businesses are structuring themselves in terms of now they're using real estate differently? And I know real estate isn't what this is about. This is about how businesses practice business, but part of that is how they utilize distribution, right?
Yeah. I'm not very active in real estate, but certainly I have some comments. I think we have seen, some, the real estate funds, changing their strategy. I mean, there has been in Mexico, the figuras, in Latin America, there are also some, securitization of real estate assets. And that has been, unfortunately, been impacted because they were not prepared, I think, for this kind of situation. I think no one probably was prepared, but certainly in underdeveloped countries, they have more, more challenging than some other areas. But I'm not very much into real estate. I mean, it's very specialized. But I think, again, the region is growing to a tremendous change and adjusting very rapidly because of the limitation that they have faced during this pandemic. But Carlos, you may have had some comments on Anthony.
Well, intuitively, and I'm also not really involved in real estate. Intuitively, clearly, there's got to be an impact. There's got to be a change. Just from a distribution standpoint and from an e-commerce and from a delivery standpoint, there's got to be change. So I think clearly the logistics space is clearly going to be a beneficiary going forward. No question.
It's the same thing that we see as well too from the hospitality standpoint. So expanding on the different real estate asset classes, hospitality being.
Sorry, I can barely hear you. Sorry.
I said hospitality within the real estate asset class, hospitality being the number one asset class that's been impacted, as we heard earlier, and we see the same trend. You know, there's a lack of liquidity in the hospitality sector, and you know, a lot of them are coming to the U.S. in order to raise capital, which actually leads me to my next question, the panel. We see a lot of SPAC deals going on. We see a lot of activity in that space in the U.S. How do you guys, do you see any opportunities for, investors, both family offices as well as institutional investors from the U.S. utilizing any of that mechanism in order to enter into the Latin market or be able to invest into the companies through any of those mechanisms?
So the question is back to Latin America.
Exactly.
Yeah.
Well, from our perspective, we haven't seen too many SPACs going into Latin America. We've looked at a couple, tried to do a couple of transactions. I think Fakiri would have been great to answer that question. We're not that involved in that space, so from my particular standpoint, I think any opportunity that's shown that makes sense with the amount of liquidity that's available in the markets, I think probably people will take a hard look at it. So maybe, Alessio, I think you may have had more experience in working with SPACs.
I mean, I know about a couple of cases, but there are not that many. I mean, I think one of the first one, if I recall correctly, is a group, Andean corporation, SPAC, that I think closed the transaction.
Glass.
Yeah,
Glass.
Yeah. Indeed, yeah. Oi is the only one that I really know that has been, really execute any acquisition. I review because, as you mentioned, Carlos, I think Fakiri was getting into that topic, and I found it very interesting for some of our projects. Mm. And I check online, and there are a handful of maybe SPAC, but they are very new in the region. I mean, there are a couple in Brazil. I think that it was sponsored by Credit Suisse or maybe UBS. There is a case in Mexico. Actually, it was a local SPAC. It was not an international stock exchange. And I think it has good potential, but still, as I mentioned before, they are very limited access to capital. So I haven't heard of really more than 3 or 4 currently in the actively or investing in the region. So it's very.
Yeah, I think we need Fakiri for that answer. But I mean, obviously, you're seeing SPACs everywhere. They're becoming, you can't ignore them. But I did have one other question, which is that you mentioned earlier that there's been a lot more of larger private equity funds. They're looking to invest in larger deals, et cetera. So we had, Brookfield and their Brazil fund, they probably pitched us in 10 or 12 cities around the US when they raised their $9 billion Brazil fund. And anybody who remembers that also remembers that Brazil kind of went into a downturn quickly thereafter. And the Brookfield fund became less of a growth fund and more of a, opportunistic fund, so to speak. Do you see that the, private equity concerns that you work with commonly, or that you may be in touch with, that they're repurposing themselves?
Yeah. Well, I mean, in the case of Brookfield, if I'm not mistaken, I mean, they specialize in infrastructure energy. So that's a very interesting industry or sector in Latin America. And we have seen, good opportunities, especially in renewable energy. Actually, we're working in that industry right now. We have on a project. So that area, I think, is of interest. I mean, infrastructure. I think I was preparing for this event, and I review an article from the McKinsey Global Institute about what is needed in America to promote, to foster the growth in the region. And one of the areas is certainly more international investment in infrastructure. I mean, the Latin American countries have limited capacity to really invest with through the government or to local markets. So I hope we are able to identify more opportunities in that space in Latin America, and certainly energy, renewable, non-traditional renewable, in hydroelectrics are very common in some countries, Brazil, in Colombia, in Peru, in Chile, but more solar and wind. I think there has a significant opportunities to to grow in the region. And another potential Marty, that I don't think I mentioned before, is that we have seen also multinational US or Europeans that have considered divesting their Latin American assets because they are aligning their strategy based on foreign conditions. So we closed on a transaction in Dominican Republic of a European multinational that decided that the Dominican Republic was a small market, even if this was the number one player in that field. Also, we are advising on a US entity that is selling their assets in Chile, Colombia, Brazil, and Mexico. They are in the building materials. And also we are advising on a client in South America and acquiring a mining company from another multinational. So certainly multinationals divesting could be another good opportunity, which I probably didn't mention before. I didn't want to forget about that. But I guess there may be some question, Anthony.
So that, given our audience, for example, family offices, institutional investors, what is an investment rationale from your side that you would like to present to them in order for them to enter the market or see the market, how to diversify within the market?
I didn't quite get the question. Sorry, because it's your audio is not very good.
Sorry about that, Tony.
Sure what's going on with my laptop today, but let me repeat. Given the audience that we have today on our conference, family offices, institutional investors, what is your investment rationale to them looking at 2021? Number one, to enter the market. Number two, if they're already in the market, how to diversify within the market.
What I can say to that is that basically the good structured transactions with clearly identified sources of repayment that cover foreign exchange risk to a family office that typically will have a lower risk profile, I think is a good opportunity for investors to look at. The duration is typically shorter, and I think the credit metrics are reasonably good that allow for the repayment of the credits. To the more speculative investor, I would say take a look at some of the venture capital investments that are going to be coming out of Latin America in the fintech space or in the telemedicine space.
Yeah, I think for a US-based family office, you're looking for higher returns. Latin America offers opportunities in 2021. I mean, certainly you need to be very careful. I mean, each country is different. I mean, sometimes US or Europe consider Latin America like the same region because speak Spanish and mostly Catholic or whatever. But each country is completely different. So we have seen, large successful companies, from Mexico going to Panama, 2 million people, and they perform really badly. Or the same, from groups from Brazil trying to expand in the region. So each country is completely different country. So don't assume that they are the same region, and because you're successful in Mexico, you will be successful in Colombia, Chile, or Brazil. So
I mean, there's real cultural differences, right? And there's real legal differences, right? Constitutionally.
Yeah, I mean, I think it's the way that doing business is completely. Yeah, I mean, Argentinians, Colombia, Mexico, they do business completely different. I mean, you need to have very good insight about each country, not just the industry. Maybe you can have some global trend in some industries, IT or something like that. But when you are going to execute on a transaction, each country has different challenge than the other. Latin America is not a region; it's a bunch of different countries put it all together in a map.
So we're coming up to a lot of time, so I want to give a couple of minutes for any audience questions from the chat. I don't see anything in the chat box or Q&A right now.
Why don't you guys give parting thoughts? Talk about how people can reach you and where you are if you're not in Latin America. Where do people reach you?
Well, I put my email on the panelists as you suggested. I'm actually right now in Guyana, Georgetown, Guyana. I think there's a lot of interesting opportunities in this country, believe it or not. Very market-friendly government in place, and certainly an underbanked region, country, I should say. So I'm based in Miami. I'm in LinkedIn, so if somebody would like to reach out, I'd be happy to get back to you. With regards to the region, I said at the beginning, we're bullish in the region in general. We like the countries that Alessio mentioned, Peru, Colombia. We like Central America. We actually just launched 2 weeks ago a Central American fund. Basically, it's the CONCACAF. It's going to basically from Mexico to Panama, including Dominican Republic, because it's a less volatile market. I think there's a lot of countries there, Guatemala, Honduras, Panama, the yields are low, but the volatility is also low. So our general closing thoughts is that we're positive on Latin America as a region. We do tend to look at it as a region, although I do agree with Alessio that each country is different. We have knocked out Brazil. We don't do business in Brazil. Our view of Brazil is that if a deal comes to a shop in Miami or in Panama, it's because nobody in Brazil wants it. And because it's a big enough market, and certainly a competitive enough market, that there's plenty of players in Brazil. We've been burnt a couple of times in Brazil, and you know, when you get burnt a couple of times, you learn your lesson. So we focus more on Mexico and some of the other countries that I mentioned. So from my end, thank you very much to everybody. It was a pleasure talking to you today, and look forward to staying in touch.
Perfect. Alessio?
Yeah, like final statement, also agree with Carlos. I mean, we are optimistic about the region, and when I mentioned about the different countries, my advice will be also to be diversifying the region. I mean, you never know where will be the new star or the new Venezuela
or the next Argentina.
The next Argentina, yeah. So you certainly need to be diversifying the region. So nice meeting you, everyone, and thank you for the invitation, Marty, and Anthony. Thank you for participating.
Thanks
Thank you, everybody.
And Tony, how do people reach you?
I'll drop my email address, but I'm in LinkedIn as well too, Anthony Hussein, and very much thank the panel, Marty, to you, everybody else that attended, and I apologize for the audio. I'm not sure what's going on here, but technical issues.
Yeah.
No worries. Thanks so much.